Okay. All right. So the first thing I want y'all to do is I want y'all in the income tax section, if you have a book, turn to these pages. This page right, this table right here is the tax table. What page is it on?
257.
So write that down, page 257. And what I would do if I was you for the test is make sure you kind of make a sheet for this, copy and paste, bring it into word processor, print it out, and that way on the test, you'll have it there in front of you instead of flipping back and forth in the book or whatever. And most of the time, the homework or the test question will have where you click on it and you can see it. So however you want to do it. That's page 257. What about the FICA? What is it? What page is it on? So you got to look for it. I don't know why that thing went away. Hold on a minute. FICA, it's not in a blue box. It's just sitting there because this book sucks. Just look for FICA, and I think it's
260.
260. And this is oh gosh, capital gains. Look for capital gains.
And that is 015. Is that
Yeah, page what?
That's 261. 261.
So, before we start doing anything with income tax, you need to make sure you mark those three things. Now, when we're talking about income tax, and this is the only section where I make it priority that you follow the examples in the book, okay? There's no way I can make it easier because this is complicated, all right? And there's no way, I've tried, and there's not really anything you have to read the section on 7E, and you have to follow the examples in the book, all right? We're not being accountants, and we're not being tax people, so it's not something that we do every day. So you're going to have to follow the examples in the book versus something like taxes, sales tax. You do sales tax every day in your head, and you can do that every day. But this, you don't do every day. So, and there's no shortcut. This is not, it's math, but it's not math. It's not algebra. It's not geometry. It's nothing but accounting is what it is. And accounting is very difficult if you don't know the definitions and you don't know the procedure. All right, people say, oh, accounting's easy because all it is adding and subtracting. I hear that a lot from students going into accounting. Oh yeah, I won't go into accounting. I can add and subtract. And they fail accounting 101. You know why? Because they don't know the terminology. They don't know the terminology and they don't know the procedure. You know, in algebra, I can show you how to factor and divide. You know, factor, I can use long division to divide, and I can factor and cancel out. You remember that in algebra? That's two different ways I can show you how to do one problem. But I can't show you a shortcut or easy way to this because there is no shortcut or easy way to it. The procedure is there, and it's there, and there's no way you can modify it unless you use a computer and type in the numbers and it does it for you. So that's why I'm telling you to just follow the examples in the book, because the procedure, I cannot make it easier. I cannot make it more difficult. Well, you know, there's some people that can make it more difficult. So that's why I say just follow the examples in the book, and that's what we're going to do in here. Okay, does anybody understand? Everybody understand what I'm saying? It's not like I can say, oh, I got an easier way to show you. I can't, I don't. So I wish I had another example in math to where there is no, the only thing I can say is accounting. accounting is the only way. I mean, there's only one way to do accounting, and there's no shortcut. So don't forget that our income is what we bring in. Now, what is the two incomes? There's two types of incomes. What are they? Gross and what? Net. Now, what is gross? Gross is what you get when they make out your contract. Here at McClure, you're going to get $30,000 a year to do your job. That's the gross. What's the net? The net is $15,000. What I get back, after they take out what? Taxes. All right, and FICA and all that good stuff, and what is it? Social Security, Medicare, all that. So when I get older, I will get a check every month for what? $15? Yeah, pretty much. So that's why I have 2 401ks, cattle, and retirement with South Carolina. So hopefully I can buy medicine along with that $15 Social Security check. So there's two types. There's gross, which is the contract. I like to tell people it's the contract amount. Okay? And then the net is the check amount. And you need to put in there somewhere before taxes and what? After taxes. Now the net is what we're going to be dealing with. Okay? I'm sorry, the gross is what we're going to be dealing with. But we got to subtract things and add things to it. Now, what do you subtract and add? Well, anything that comes in as income can be your check. What else? What else can come in as income? Look at that. Look at on the first couple of pages of 7E or 4E. What does it say? Interest, dividends. I don't know how to spell dividends. Is that right? What about if you have a apartment and you're renting an apartment to somebody? Is that income? What about child support? I mean, alimony and child support. That's income too. So you got several forms of income. I'm gonna put alimony. I think alimony, child support. Coming in. You need to say coming in. That's income. What else did I say? Rent. What do you call it if you're a renter? If you're a landlord and you got rent coming, I'll just say rent coming in. Rent coming in. What else can be income? I've got dividends, so that means stock market and stuff. What else? Huh? School? No, you write off school as you paying for it. You're paying for school. What you're talking about is a tax exemption or a tax credit. That's what you're talking about. We'll get to that in just a minute. Well, maybe Lindsay will get to that. What else can be? Just give me one more example. Anybody can think of one? When somebody gives you money.
Oh, inheritance.
Inheritance, yeah.
You lose most of it.
Yep.
In other words,
I'm just going to put, I don't know how to spell inheritance.
In other words, when you die, the government gets just about everything.
Yep, it's called, isn't that the death tax?
Yep.
All right, so you take any income that you got coming in. Yeah, well, see, businesses are different. We're talking about individual. Businesses, yes, you put down everything that yeah, like my mother, okay? She's the technical owner of the farm, and she rolls her income tax in with the farm. So her income is the checks that we get when we sell steer at the cow sale, that's income.
Well, but if you buy a product online, let's say you buy
AO, Amazon?
Yeah, like something on Amazon, you can get anything you want.
Well, Amazon is supposed to send you a printout, and then you give that to your tax person, and the taxes on, I don't know how they do that exactly, but they use the taxes that you buy online stuff. They do use that. But that is an expenditure.
You can get a tax break.
Yes, I think.
Like online.
Mhm. I have to ask the accountant when I go back to the tax. I don't know. They don't cover that in the book. I don't know. Can anybody answer that? No?
All I know is the things done on the computer, and all the states are concerned about across state lines. They want the tax money.
Yeah.
So they're gonna get.
That's why they have to do that report. Amazon and all these other eBay or whatever, they're supposed to send you a report, or you're supposed to request it, and then you give that to your tax person, or you type that in.
Interesting.
Yeah. Mm-hmm.
Is it because I'm buying more money?
I don't know. I can't answer that. That's a little bit over my pay grade. That's way over my pay grade. You need to ask your accountant person or income tax person for that, or you can Google it. I don't know. That's kind of, I don't know. That's a little bit deeper than I need to even go. I don't want to give you false information. All right, this is all income. Now you got to take off stuff too. All right, you just put some take off stuff. What can you take off? Or what do you take off? Well, there's deductions. That's called deductions. These are called deductions. And let me go back here a second. And I didn't. Okay, they're right here. Deductions are right here. But you also take off. Where's my? There we go. Take off exemptions. Exemptions, deductions, retirement. Write that down. Exemptions, deductions, retirement. In other words, if you pay for 401k or whatever, you take that off. So this is adding, and this is subtracting. Now, when you take all of this and you subtract this, so we'll put a big subtraction symbol here. You take all of this and you subtract this, then that's equal to your taxable what? Income. Now that's the first step. The first step is to take all your goodies, all your income, and that's what income means, money coming into your pocket, and you subtract all your exemptions, deductions, and retirement. Now, exemptions and deductions can be either one block, or it can be every receipt that you have. Most individuals do one block. Now, as you go up in your tax bracket, like $30,000, $50,000, you make $30,000 a year when you first start out, then you move to another company, and after you got 5 years experience or 10 years experience, you get $60,000 a year. Once you get to a certain point, the itemization can help you. But most of the time, the itemization is not really, it's not really better than the standard deduction. See here? Okay, those two right there, most people just take that instead of fooling with receipts. Okay? And that's taken off of an average that they computed or whatever the case may be. Now, if you're in the 60,000 or whatever bracket it is, and you want to start keeping up with your gas receipts and all of your food receipts and all of that, knock yourself out. Okay? But most people just take a standard deduction and exemption, which most of the time equals, for single, it's about $10,000. Okay? So you need to put off exemptions and deductions. You need to kind of underline that or put a star beside it. And you can go with the standard, or you can go with receipts. Just make a note about that. Now, once you get the taxable income, that's when you go to the table. So you need to make a note that we're going to the table with the taxable income. So what I'm going to do right now is erase all this. Well, might as well just bring it back in because I can't erase it because it's going to erase these things. So I'm just going to go to another page. And I'm going to bring in an example, and I want you to read it, write it down in your notes so you'll have it for your, what's that thing at the end of the unit? Test. I just can't get back into things. I'm sorry. All right, Hubert, what are you doing? This example is in your book. Because like I say, I can't make it easier. I'm just reporting the news the way it is. That's it. All right, we're going to do these three examples. Write it down using 2013 rates, blah, blah, blah. That's what's in the book. I'll pull that back up in just a second after you write it down. We'll make it smaller. I'll freeze it so y'all can write it down. You all see it. While y'all are doing that, I can bring in the tables. And if you have a book, just highlight it. Well, my Fire Stick, I've done watched all the movies on my Fire Stick that are worth anything. The horror movies and the action movies. I'm just waiting for it to update. So what they do is they load the, what do you call it, the trailer first, and then once they get the movie on there, you can see it. But the last two that came on was the Power Rangers, which I don't care anything about that. And Life, is it Life? Yeah, that horror movie. Yeah, it came on the other day, but it's just a trailer, so I'm waiting for it to come on. It's kind of bad when you got all the movies in the movie theater and you done watched them all. I ain't watched them all because I don't like them all, but Kong was good. Huh? It was a good movie. I'm not a Kong fan. The last two King Kong movies, huh? This was the one to now at Kong Skull Island. It was real good. Mm-mm. Why? Oh, like Godzilla, I heard, yeah. No, the thing about the Fire Stick is sometimes you don't get the beginning and the end. I mean, you get the end, but then it cuts off. It don't, I guess whoever's videotaping it with their phone, I guess, because you can tell the video, you can tell they're recording it in the theater, because you see people walking by. Oh well, bootleg. But that was a good movie. What else did I say? All right. Now, it says Deidre is single with no dependents. So, first of all, when you look at single with no dependents, hold on. Her adjusted gross income is $90,000. Now that's her adjusted gross income. So she doesn't have anything else coming in, does she? Because the question would say that. It'd say, but she has $1,500 coming in on interest and blah 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 blah. It would say something. It says when it says her adjusted gross income is $90,000. That's it. She makes $90,000 a year. Boom. So you immediately go to this column right here. Why? Why do I go to this column? Because it says single. Duh. Single, single. Okay? So that's the column we're going to be working with. So these two, that's $10,000. Add them up. So we're going to take the $90,000. This is part one. We take the $90,000 income minus the deduction standard, which I think, I don't know if it says she say it doesn't. She just, if it doesn't say it, then they're just going to take the standard. I don't think you want to do itemized. Itemized, they give you a gas, they give you whatever you can write off. Name some things you can write off: fuel, books, house, what? Yeah, miles traveled. If you're, yeah, stuff like that. You can. I can't think of. I don't itemize. So what can you take off? Itemize. You know, you ever itemize?
I don't know this all the time.
What? Name some things you itemize. Clothes,
Gifts, charity.
Yeah, charity. That's another thing. Charity. If you give to the church, if you give to Red Cross, if you give a car to somebody, that kind of thing, you can take that off. Anything that you give away. Retirement, you take that off. I'm trying to think of stuff. I can't come up with the one think of the words of the song. But itemized, you don't want to keep up with all that stuff. So most people, if it doesn't say you're itemizing, then it's a standard work. It does.
And it's written up there. It says assume they all claim standard.
Yeah. Okay. It'll say that.
Tax.
Okay. So we're going to take away 10,000. So $80,000 is her what?
Yep.
Taxable what? Income.
Yeah.
And when you get the taxable income, you go to what? You go to the table. So we're ready for part two. Part two, we're going to have to divide. You're going to have to take the first 10% because we're right here. Right now, where is her 80,000 falling? It's falling right there. Everybody see that? Because the 87 up to 87,850. Everybody see that? Now that's the first thing you do. You find where you are. Find the tax level or tax bracket, whatever. And that's what we just did. So erase this. I can't erase it because it'll erase the whole thing. So okay, we found our tax bracket, and we're going to have to divide that $80,000 up into three brackets. Why? Well, somebody take your calculator and multiply 80,000 times 0.25. I'll just do it on here, it takes too long to do it. How much? 20,000. So boom, if we just had a flat tax of 25, which it wouldn't be 25, it'd be more like 15 with a flat tax. Then you'd write a check for $20,000 because that's what you owe. Boom, just like that. All right. So the government wants to be fair to us, so you have to build up to that 87,000. So you start with 10%, up to what?
89.25.
Okay, so we say 10% at 89.25. Okay, so we've got our first bracket. Our second bracket up to 36,250, but we don't want to pay twice on the 89.25. So what do? Subtract what?
89.25.
From 36 what? 36,250. Okay, so 15% at, and I'm going to put right here, 36,250 minus 89.25. And then you move up to the next bracket. The next bracket is 25% at, and then what do we subtract now? Well, it's up to 87. We don't have 87. We have 80,000, right? But we don't want to tax this twice, so we got to do 80,000 minus what? What? 36,250. Now, get your calculators out, or your phones out, and do that math. And if you look, that's what they did here. See, there's no way you can, there's no alternative method. You got to do it the same way every single time. There is no other way to do it. So check your numbers with these numbers. And see what you come up with. Now, what did we say at 25,000, at 25%? You said what, 20,000? So it helps the person to go by levels instead of just by the flat tax. Now, let me make a note here. You've heard some people running for office that say a flat tax. Well, their flat tax is not going to be 25%. A flat tax is going to be somewhere within 10 to 16%. Usually, most of your people that want a flat tax, they say somewhere in that area. A lot of people say 15%. So that means no matter how much you make, if you make $30,000 or you make $150,000 a year, you would pay a 15% tax on everything that you have, whatever it's worth. And some people say that's a lot easier to do because you get rid of half the IRS, because you wouldn't need all them people. And instead of $20,000, we're paying what? $15,000 in taxes. Now, basically, what does that mean? That means that you owe Uncle Sam how much? Well, you owe him $15,000. What did it come out to be? 15,928.75. Somebody give me these three totals. No, this is 892.5. And what's these two? I got it covered up. I guess I could move it. Y'all have them? 27,000 what? 325. That ain't right. You can't have 27,000 and 8 and make 15. That ain't right.
Well, then it's 409,875.
Oh, man, just forget it. I'll just move it around. Y'all screwed that up. Y'all suck. Let's see. Where's my... Lord have mercy, this thing's going crazy. I don't even know what that is. There. There. $409,875 and $10,937.50. $10,937.5. Just so you have it there. When you add those up, and you get 15,928. Now this is what you owe Uncle Sam. You owe Uncle Sam 15,928.75 in taxes. In other words, Uncle Sam says, as a U.S. citizen, at your bracket, you owe $15,000 to do your $16,000 to do your part for taxes. And all those taxes go to what? Well, let's take a look. Because all of y'all know about this. Because y'all are so well informed, right? Write this down. USDE, how do you spell debt? Because I always get it mixed up with department. DEBT, debt clock.
Oh.
There you go. Now I want you to take a couple of seconds, and look at that. Now this ain't from HubertConspiracyTheory.com. This is the United States Department of Agriculture. USDA put this out. Now just take a minute and look at it. That's where your taxes are going.
Pay a debt that can never be paid.
Yep. About 16 to 20% of that national debt is China and Japan. They've loaned us money for that. I think it's 16 to 20%, something like that.
And all China's going to do is let us keep going.
Yeah.
And then they're going to say, okay.
Time to pay up.
And then, of course, we're going to say we can't. And they're going to say, okay, everything east of Mississippi is not China.
Yeah.
That's exactly what they're going to do.
I'm going to move to Australia. No, I'm going to move to Israel. Israel won't take no crap like anybody. That's it. Now, don't just look at the national debt. Look over there where it says employed, unemployed. And then it says out of work or whatever. There's 2, 3, what does it say different? It says, I can't see it because the angle. Hold on. U.S. workforce now. Oh, official unemployed and actual unemployed. Now, during the last 8 years, we heard that unemployment was this, and everybody would say, well, that's not the right numbers. Why? Yeah, in other words, they were using the other number that made the unemployment seem what? Lower. What they wasn't doing, as Donald Trump says, they wasn't adding those two together. See, the actual unemployed, I can't remember, official. Official unemployed means people that are what? Getting paid for unemployment. And actual unemployed are people that are not getting what? Benefits. Both of them are both what? Unemployed. So instead of 7 million, it's really what? 21 million. Does that make a difference? Yeah, it makes a big difference. What else can y'all come up with looking at the employment?
Well, most people used to look at it as who's working, who's not working.
Mm-hmm.
You gotta look, we have 330 million people.
Mm-hmm.
95 million are not working.
Yeah.
I'm talking about working age.
Yeah.
So
But that's only 21 up there. Where's the other coming from?
oh, this is all the bogus numbers.
Yeah, I know.
5%.
Yeah. Also, look at the workforce. Now, 152 million. And where is the? Hold on. I'm looking for something else. U.S. income taxpayers. The thing I wanted to say about full-time and part-time is a lot of hype in the last 8 years was, oh, we've added so many jobs. But what was most of those jobs? Part-time. Why? Because businesses wouldn't hire full-time because of what? Obamacare. Because they would have to pay for the Obamacare. And that's why the part-time numbers went up, and the full-time numbers in unemployment went what? It went up too. The unemployment did. The full-time numbers went down. Look over here. What does the gray mean versus the red? And we don't have there's green. What's green mean? That's money what? Coming in. What does the red mean? Going out. What does the gray mean? I think that means we're borrowing off of it. Now, I'm just letting you know look at our trade deficit. Where's our trade deficit? Our trade deficit, look at all our trade deficits to China. For those that don't know, that's 349 what? Billion. Why is the trade deficit so high to China? Because when they bring stuff into the United States, they tax us. When we import stuff, when we export stuff to them, they don't pay anything. Y'all know this?
That's what Trump's fighting.
And that's what Trump's fighting. What else can you find on this thing? Now there's something else. If that doesn't depress you, we can go over here. Clock time machine. And go to, well, that's 2017. Go to 2021. Now, if you really want to do something, go back in time. Back in time. Let's go to 2000. Debt was $5 trillion. $2004. $7 trillion. So it only went up $2 trillion. $2008.
That's what people don't realize. All this
Went up another 2 trillion.
is all of a sudden.
Now, it's 9 million. So it's been going up 2 trillion about every 4 years. Now look at 2012. What did it jump that time? 6 trillion. And then now it jumped to 20 trillion. So somebody's been spending money, what? The last 10 years. What else can you tell? This is a great screen for people to wake the heck up. Not only with your taxes, not only with your business transactions, with the payments, but you put the payments with the income tax, and then you think about this, it really should make an impact on your thought process about spending and what your future, basically. And I don't mean this to scare you, because everybody's going to be all right as long as you work. But I don't think the U.S. can continue to give away everything, the baby with the bathwater. I don't think they can. And that's why the present administration is trying to cut, and trying to undo some of the stupid trade deals that we've done in the last 20 years. And we have done some stupid trade deals in the last 20 years. So, anybody got any comments?
Yeah, it's slavery. People don't even know it.
Yeah, it is. It's pretty much slavery. And what do you do to slaves? You keep them what? Keep them stupid. I'm serious. I'm talking about any slaves, all right? The Israelites, okay? Let's talk about the Israelites. I'm not talking about the slaves in the United States, okay? Talk about the Israelites. You don't want them to, what do you not want them to do? You don't want them to talk. You don't want them to group. You don't want them to conversate. You don't want them to what? To learn. Why? Because if they learn, they start to what? Figure this stuff out. How many of you have seen any of this that we've gone over in high school?
That's what college do.
Raise your hand. Anybody? Now, why? Now, how difficult is this math, really? The math that we're doing right now, how difficult is it? Why ain't you been shown it? Anybody got an answer? Think about it. All right. Now that I've totally depressed all of y'all, and you're going to go out and kill yourself. No, I'm just kidding. All right, so let's see. We go to the next page, I think. Where's my page that we were going over? Okay, we owe that. Now, what do you take out of this? In other words, how do you pay it? You don't write a $15,000 check. What comes out of that? Well, each of your pay stubs have what? FICA, your paying to the government, paying to the state, paying to what else? Oh, there's something else on the debt clock I want to show you right quick. Just for your own, it won't depress you as much. You can hit, I've got this thing blown up too big. Where is it? Oh, over here. State debt clock. And you can get South Carolina, and there's the state debt clock. Right at 5 million, population of South Carolina is at 5 million. Unemployed, 102,000. Look at that. Wait a minute. 102,000, 722,000. Wow. I would figure it would be 100,000, but evidently it's easier to get food stamps than we thought. The debt is 45 what? Trillion, or is that billion?
Okay.
No, that's million, billion, that's trillion. That can't, is that right? Dang, we in debt too. We spending 49 trillion, or is it? That's thousand, that's a million, that's a billion. Is that right?
No, it's,
The 601 policy,
Yep,
and then 66 million.
billion, okay, thank you. I don't know what I was thinking of, okay.
yeah, we can't owe more than the nation.
That's what I was thinking. All right, anyway, debt per citizen. So if everybody wrote a check for $10,000 today and made it out to, well, all the people that, my 10-year-old wouldn't have to write a check. But if everybody paid $10,000 check, boom, the state deficit would be over with. That number right there, we didn't look at that number. Is that number on the U.S. debt clock?
Yeah.
What's our debt
Do
per
they not
citizen?
do that? Like,
Debt per citizen is $10,000.
I mean, for the nation.
I'm gonna go back to the debt clock.
it shows it in the form.
I can't, y'all, oh, there, there's another, hold on a minute. This thing's way too big. Okay, somebody look at it. So y'all see where's the food stamp thing?
Second row to the right.
There it is. Okay, how many are unemployed? 21 million. And there's 42 million receiving, wow, 43 million are receiving. What's the population?
225 million.
Somebody needs to do that math. Somebody take 43 and divide it by 325. 43 divided by 325, what do you get? Just 43 divided by 325, what do you get? Point what? Y'all get 0.13? 13% of the nation is on benefits. But what's receiving benefits? What is that? What's the difference between those two?
Yeah, that'd be a bad division because up to 18, you don't even count.
Yeah.
Like,
What?
so when it comes to welfare, there's way more than food stamps.
Hmm.
There's FI, which is like,
So there's different things.
Yeah.
So we need to take, what's 163 plus 164 plus 40, it's 44, 42. Okay, take 208 and divide by 325. I'm sorry? Wow. That's not good.
I think it was one of future.
Yeah.
This is playing out exactly the way Greece played out.
Oh, yeah.
They all lost their money.
Yeah.
You could only go to the bank and take out like $20.
Wow. Okay. I need to get back to the thing. Now, what do you do with this? Well, now this is part 3. Part 3 is you take out, you got your taxable income, or your 15,000, what is it, 15,000, what was it?
928,
928 point what?
75.
75. And this is what you owe, not the same, this is part 3. Part 3 is take out any tax credits. And I'm going to put minus tax credits. Now I want you to read the section on tax credits. Tax credits is anything the government says that you can get credit for. Now I think I gave y'all the example of the solar panels.
Yeah.
Solar panels, electric car, what else is a tax credit? I'm thinking of recently. interest on your house or some kind of interest, whatever. I'm sure you just have to read in the book, huh? Insurance what? Yeah, they give you a tax credit for it, I think. But it's an official tax credit by the government. Now, think about this. Government approved tax credit. If you owe somebody money, let's say I owe Mr. Harvell $100, but he owes me $50, then what do I owe him? Are y'all that out of it? Okay, I owe Mr. Harvell $100, but he owes me $50. I owe him $50. Why? Because he doesn't have to pay me the $50 because I owe him what? $100. I owe him $100, right? And so if you do the math, I only owe him $50. But I don't have to actually give him $100, do I? I just have to give him $50. All right, think about it your own way, however you want to think of it. You owe somebody, you owe, I don't know, George $100, but he owes you $25. Then you owe him $75. You got to think of it like that. That's what the tax credit is. All right, you owe Uncle Sam $15,000, but he owes you $2,000 for having a what? An electric car. So you owing Uncle Sam drops $2,000, just like my owing $100 to him dropped $50 because he owes me $50. You get it? Okay, so a tax credit is Uncle Sam's way of relieving what you owe Uncle Sam. Now, do they give out tax credits like candy? Not really. And usually a tax credit usually costs you money in out of pocket rather than taxes.
Oh, it does. They like people to overpay their taxes.
Yeah.
And then they like to say, you want us to apply this to next year's because they want to collect all the interest on that money.
Yeah.
So they play games with taxes.
Yeah, they do. That's why the IRS is so big. So now, and this is not part of the example, I'm just going on with, now we have, instead of owing Uncle Sam $15,000, we owe him $13,928.75. And now we go to part 4. And part 4 is $13,928.75, and we're going to subtract FICA and Social Security, blah, 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 from your paycheck. And we're going to do that Wednesday, okay? Take that from your paycheck. And that number is either going to come out to be a positive or it's going to come out to be a what? A negative. Based on dependents and stuff like that. We'll talk about that Wednesday. All right? If it comes out to be positive, then you owe what? You owe Uncle Sam. If it comes out to be negative, then you what? You're going to get a check back. Okay? Because this is what you're giving Uncle Sam right here. In your paycheck, you're giving Uncle Sam money through this. Okay? If you give Uncle Sam more than you owe him, then you're supposed to get money back, right? But if Uncle Sam's number is bigger than what you're giving Uncle Sam, then you need to what? Pay Uncle Sam. So if it comes out to be positive, write this down. You owe Uncle Sam. If it comes out to be negative, then Uncle Sam sends you a what? A refund. Now, Your homework for today is to, I know some of y'all haven't read 4E yet. I want you to read 4E, and I want you to try to do the first parts of 4E, which means probably the first 4 pages. In other words, examples and homework problems that just go up to the table, doing the table, that's it. Don't do anything with FICA, don't do anything with tax credits, don't do anything. The first 2 screens, I want you to do up to the table. Subtracting those 3 that we did, I want you to do those. Follow the example that we had, do that, and do not do tax credits or FICA unless you want to, but we'll go over that Wednesday, okay? Capiche?
Yep.
All right, now let's do the roll and shut the do-jigger off.